You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Monday, 4th day of November, 2024. Hope you had a great weekend. Thanks so much for joining us here today. Whoever you are, wherever you are, we're just glad to have you right here, right now. This is our second live broadcast of the trading day. We do two every trading day. The first one, though, is private. It's for members only and those who are taking their 1-week free trial. If you have not taken your 1-week free trial, go to mytradingiq.com, and at the top of the page there's a link, purple button. Click it, fill out the registration form, hit submit, and we will get your indicators indicating today. Your trial will officially start tomorrow, but you won't get cheated out of your 5-day trial. Since tomorrow's Tuesday, your trial will run through next Monday. So a 5-day trial just really became a 7-day trial. And there are some markets that trade over the weekend, so have fun. Now, when the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and then come back for the afternoon broadcast, this broadcast, which is open to the public. That's everybody everywhere on planet Earth with an internet-connected device. There's two different ways to join this afternoon broadcast live. We'll give you the best way first. You only have to do it once. Go to mytradingiq.com. Scroll down the page to where it says Noon Broadcast. Click the link. Fill out the 30-second registration form, and you're done. Not only will it log you into our platform the day you do it, but every trading day going forward, you'll get an email about an hour before this broadcast starts. In that email, there's a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it'll automatically log you into our platform. The benefit there is you'll have access to the question box, so you can ask questions and participate in the discussion. Once Michael shows up about 50 minutes into the broadcast, then I'll also be able to monitor the question box on our YouTube channel, which is easy to remember, youtube.com/CFRN. You already know the YouTube part, so really you just got to remember the /CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, if you will, we also archive each and every daily broadcast. Currently, there are over 2,600 daily episodes archived for your educational and viewing pleasure. And thanks to the power of YouTube, you can see how we've evolved over the years. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all, but at least you have the chance to watch as much as you want. There's tens of thousands of teachable moments in all those videos, but just pick a few at random, okay? Now, of course, the more recent broadcasts are going to be more relevant to what's happening in the markets right now and in the world right now. youtube.com/CFRN. To my knowledge, it is the single largest publicly available training library for traders on the internet. True story. Anyway, this is our daily schedule. We start out with our daily devotional, word of prayer, little news, recap of the alerts. Then Michael joins us 50 minutes in, gives us a recap of what happened this morning in the live training room. Then we do some live trading on the TradingView platform for a half an hour. And then I wrap things up with our good word for the day. Now, we're on the last day of this particular topic, investing in eternal treasure. Now, it was only a 3-day devotion, and if you missed day 1 and 2, that would be last Thursday and Friday, you could go to our YouTube channel and get caught up if you want. But we'll begin a new topic tomorrow. Now, today's scripture is Colossians 3, verses 22 through 25, and I'm sharing with you from the Message translation. Servants, do what you're told by your earthly masters, and don't just do the minimum that will get you by. Do your best. Work from the heart for your real master, for God, confident that you'll get paid in full when you come into your inheritance. Keep in mind always that the ultimate master you're serving is Christ. The sullen servant who does shoddy work will be held responsible. Being a follower of Jesus doesn't cover up bad work. Again, Colossians 3, 22 through 25 from the Message translation. Now, these verses remind us that everything we do, whether in our jobs, our families, our ministries, should be done as if we are serving the Lord directly. Our efforts are not just for human recognition or earthly reward, but for eternal inheritance. When we give our best and serve others, especially in financial matters, we are laying up treasures in heaven that will outlast anything we accomplish on earth. So, question: how do you approach your work and financial decisions? Are you working and giving with an eternal perspective? Challenge yourself to think of each task, no matter how small, as an opportunity to serve God. Whether it's through supporting your church financially, volunteering your time, or being faithful in your workplace, remember that God sees and rewards your efforts. Pray with me. Heavenly Father, help us to serve with sincerity and reverence, knowing that whatever we do it for you. Let us work faithfully and with integrity, trusting that you see our efforts and reward us with your love and grace. May our lives reflect your goodness in all that we do. And as the election approaches, we ask for your guidance and protection over the process. Grant voters wisdom, ensure integrity in every step, and may the results lead to justice, unity, and peace. We pray that your will be done, bringing hope and healing to our nation. And Lord, we continue to pray for an end to the violence and suffering in the Middle East. And we lift up those affected by the floods in Spain and the hurricanes in the U.S. Comfort those who are grieving, provide for those in need, and strengthen those rebuilding. May they feel your presence and find hope through your unfailing love. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen and happy Monday. Dow falling 400 points ahead of presidential election. What do you make of that? Well, let me give you the numbers. We're going to start in the U.S. with the cash markets, or the indices as they're called. The Dow is currently down 376 points, almost 1%. The Nasdaq's down 88. S&P 500 down 29. And the outlier, the Russell 2000, our man in the street, is actually up 11 points. Go figure. In the commodity basket, crude oil up $1.79, trading 71.28 last. That's a gain of over 2.5%, or $1,780 per contract traded. Gold is down $6.10, trading 27.4310 last. Silver down 20 cents, trading 32.48 last. In the Asian markets at the close, got another comma. The Nikkei fell 1,027 points. That's over 2.5%. Now remember, we had a comma in that number on Friday. The Shanghai gained 38 points. The Hang Seng gained 61. And in the European markets at the close, FTSE up 7, the DAX down 90, the CAC down 37. So that gave us a mixed day in Asia. It was a mixed day for the UK. And because the Russell's in the green by 10 points, it is a mixed Radio Monday here in the US of A. So, let's take a peek at the news. Millions of U.S. voters will head to the voting booth tomorrow to cast ballots in what appears to be a deadlocked presidential race. Various poll aggregators, like Real Clear Politics and 538, have former President Donald Trump leading by 0.1%, or Vice President Kamala Harris leading by 0.9%. Both figures are within the margin of error. These polls capture national sentiment, not probabilities of electoral college victory. Analyst Nate Silver gives Harris about a 75% chance of winning the national vote, but gives Trump a slight edge in winning the electoral college. The outcome is expected to be determined by the results in a set of swing states, most notably Pennsylvania, Michigan, Wisconsin, Nevada, Arizona, Georgia, and North Carolina. Now, I know many of you remember John, who used to be one of my co-hosts on the show before he passed. There was only one poll that he put any stock in, and that was the Rasmussen poll. And it just dawned on me today when I was reading an article that I haven't heard anybody talking lately about the Rasmussen poll. But that was the only one he put any stock in. And the head guy over at Rasmussen says that Trump could win in the way Reagan won many years ago, with a landslide victory. More than 75 million early votes have been cast thus far, roughly 41 million in person, and almost 35 million mail-in ballots. Data, where available, suggests even participation by party, though women outpace men by about 9 points nationally. I guess they watched that Julia Roberts commercial where women are encouraged to lie to their husbands. Now, I didn't know it, but my wife shared with me yesterday. There's also a commercial done by the same party that men should lie to their wives. Man, sometimes you wonder if an administration's crooked. But before the count's even in, you're being told to lie to your spouse, the one person you should be the most transparent with. Also at stake are 34 Senate seats and a number of competitive House districts, with control of each chamber up for grabs. Former Louisville, Kentucky police officer Brett Hankinson was convicted by a federal jury late Friday for his role in the raid that killed 26-year-old Breonna Taylor in March of 2020. The development marks the first conviction of an officer involved in that raid. There's more to be tried. The first trial for Hankinson was deadlocked. So he will be... Oh, okay, this was the second trial that he got convicted. Okay. He'll be sentenced March 12th and faces a maximum sentence of life in prison. Breonna Taylor was killed during a midnight no-knock raid on her apartment. While her name and residence were on the warrant, she was considered a soft target, with police having located the prime suspect. Taylor was shot 6 times when her boyfriend exchanged gunfire with officers, believing them to be intruders. 2 other officers involved in the raid were not charged. Prosecutors believed they were justified in returning fire. Okay, before we go to the charts, a little bit of market news. U.S. banks have a lot riding on the outcome of Election Day, even if they're not 100% sure how either candidate might treat their industry. The knee-jerk reaction, according to KBW analyst Chris McGrady, is that a Donald Trump victory will mean a return to looser regulation of banks and more leniency in approving the sort of corporate mergers that produce big profits for the Wall Street giants. A Kamala Harris win, on the other hand, may mean that a more aggressive period of overseeing the nation's largest financial institutions under President Joe Biden will continue. Investors are counting on the Federal Reserve Chairman Jerome, to keep rate-cutting plans on track this week with a 25 basis point reduction, despite some signs of stubborn inflation and mixed signals about the job market. Well, there was nothing mixed Friday when the jobs report came out. They were expecting 100,000 new jobs, and we got 12,000. I don't want to hear about hurricanes. I don't want to hear about strikes. We got 12,000 new jobs in the entire country. And I wouldn't be surprised if that number gets revised downward in coming weeks. According to JP Morgan Chase, this week's FOMC meeting is a refreshingly easy call. The reasoning for a cut is still valid. Now, are we going to get a quarter point or another half point? Guess you'll have to wait till Wednesday. because Jay Powell might have a new boss. Constellation Energy, which we've talked about in the last few weeks, fell about 12% in early trading today amid a broader decline in nuclear power stocks following the U.S. government's rejection of another big tech nuclear power agreement late Friday. The Federal Energy Regulatory Commission rejected a proposal from grid operator PJM to ramp up the amount of power supplied through the grid from Talon Energy, TLN, to an Amazon artificial intelligence data center. Talon said in a statement on Sunday it believes that the Federal Energy Regulatory Commission erred in its ruling, adding the company is evaluating our options with a focus on commercial solutions. Nonetheless, the stock is down 12% at the moment, at just over 11. And last, U.S. factory orders fall a second straight month in September. New orders for U.S. manufactured goods fell for a second straight month in September, and business spending on equipment appears to have pulled back in the third quarter. Factory orders dropped 0.5% after a downwardly revised 0.8% decrease in August. Economists polled by Reuters had forecast factory orders would fall 0.5% after a previously reported 0.2% decline in August. Well, that doesn't sound like a lot of confidence in the economy to me. How about you? Yep, it's in God's hands at this point. Always has been. Always will be. Okay, Logic 247, that's our 24/7 around-the-clock E-mini alert service. It's not just E-minis, it's also crude, gold, silver, bonds. Over the last 327 weeks, we have issued over 18,200 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on market structure and a very simple process that we teach all of our passport holders in their one-on-one mentoring sessions. Now, this recap was done this morning at 6:30 a.m. Eastern, and these alerts were based on last week's weekly trading zones. The new zones come out every Monday morning at 6:15 a.m. Eastern for members and trial members. Once they're published Monday morning, they're carved in stone for the entire week. So the alerts that I issued today are based on this week's weekly trading zones. So when we go to the charts, you're going to still see last week's zones because these 11 alerts were issued last night. So out of the 11 that were issued last night, at the time of the recap, we're still waiting on the outcome of 4. That gave us 7 actionable alerts, of which 1 or 14% would have been stopped out. Again, based on market structure and that simple process we teach all of our passport holders in their one-on-one mentoring sessions. Now, the logic alerts are not designed for you to just trade them, so you don't have to learn how to trade. Obviously, you can trade them, but please use them in the manner that's intended to help you learn how to read a chart. Every logic alert has an entry price, an initial target, second target, third target, and then a final trade to target. The space between each target, that's a window of opportunity. The purpose, again, of the logic alerts, yes, you can trade them and make some money, but the more important thing is that you learn how to read the chart. Because until you can properly read a chart, you're never going to become a consistently profitable trader. That's just the truth. So all I can do is suggest you do the right thing. So you can have the best of both worlds. Yeah, you can trade them, okay? But the more important thing is that you use them to learn how to read the chart. As you'll see me read the charts here in just a moment. Now, long before we had Logic 247, we had our concierge trade alerts, which we still have. The Logic alerts come out around the clock, 2 a.m. or 2 p.m. Futures trade around the clock, and we have traders around the globe. Our day session is their night session, and vice versa. Now, if you're a member or trial member, make sure you read this information up here. And if you have a question, ask, okay? But last night at 6 p.m. Eastern, when the markets opened, all of our members and all of our trial members had every one of these targets: ES, Dow, Russell, crude, NQ, gold, silver, and bonds. So with that, we're going to go to the daily chart of the S&P 500 E-mini. There's the all-time historic high. The green line's called the BBC. It stands for Bull Bear Cross. When price crosses above the green line, we're bullish and expect higher prices. When price crosses below the green line, we're bearish and expect lower prices. Higher prices, lower prices, higher prices. You'll also notice that when price pulls back to the BBC, whether it pulls from below or above, the pullback holds more often than it doesn't. But we know eventually it will trade through, and then look what happens. It pulls back and the pullback holds from the other direction. And you get a leg, retracement, the pullback holds. Then we had a bit of a historic rally here. And we got back below the BBC. And then the pullback held, and the pullback held, and the pullback held until it didn't hold. And where did we find support? At the 24% fib retracement. Now on Friday, we ran up to the 24% fib extension, found resistance. And you'll recall, if you were tuned in Friday, I said, guys, this is going to tell us a lot about the market, because at the time we were doing the broadcast, we had a big green candle up to the 24% fib extension. I said, if we close near the high of the day, that shows strength in the markets. If we close near the low of the day, that shows weakness in the markets. And then look what happened last night. We took out Friday's low, we took out Thursday's low. And right now, we're just sitting at the 24% fib retracement with a doji. But we got red and falling overhead, and it's in the process of crossing the BBC. That's called a bearish cross, okay? That's important. I won't go into it right now. But if you're wondering why we're looking at a daily chart, institutional traders, the ones with giant account sizes who trade in huge size, they're the ones that actually move price. Not me and you. We're just liquidity. But that's okay. We can still make money. Whatever you trade, whether it's futures, stocks, crypto, Forex, ETFs, if you'll spend 2 minutes with the daily chart before you begin your trading on the smaller time frames, you can get a free look over the shoulder of the deep pockets that move price. And when you see a doji at a critical area like a 24% fib retracement, then that means there's indecision in the markets. No surprise, because we've got a presidential election tomorrow and then a Fed announcement on Wednesday. But you're also able to identify where the market should most likely find support. Right here, and then right here at this bullish cross. When you have a bullish cross that leads to an extended move, the first time price revisits that area will almost always be good support. Again, where we close today, now this low that we've got today, it's basically the same low we had on October 8th. Oh, it's not going to let me grab it, is it? Come on. The low is 25 and a quarter. The low today, 24 and a quarter. Okay, 1 point difference. So we got a double bottom right here. Here to here. We need to break that double bottom, and if we do, we're probably going to make a quick run down to this low, catch a bounce, and then continue down to the 38. But with the election tomorrow, and I mean, there's going to be a lot of crazy volatility tomorrow night, as tomorrow might be quiet, okay? But once the election results start coming in tomorrow night, I don't recommend you trade it. You know, watch the results or just go to bed, wake up, find out who the president is. You need volatility as a trader, but you need volatility that you can manage. John and I were up late when Trump got elected the first time. And when they called it, and I think it was about 3 o'clock in the morning, when they finally called it and said Trump was the winner, man, the market took off like a rocket. So is it possible, even though technically we should go lower, could the fundamental fact of the next president alter that? Yeah. Or could it exacerbate a downward move? The answer is yes to both of those. Okay. So again, whether you trade futures, stocks, crypto, Forex, ETFs, look at your daily chart for 2 minutes. Identify the major areas of support and resistance, and see what the deep pockets are up to. Remember, they've been trading all night while you slept. See what they did overnight. You can see we came down, we ran up, indecision. Okay. Now remember, these are last week's weekly zones, because all the alerts that go out on Sunday night are based on last week's zones, because the new zones don't come out till Monday morning at 6:15 a.m. Eastern. So all the alerts that I issued this morning, those are based on the new zones. And on tomorrow's broadcast, you'll see the new zones on my charts. We had a gap lower open last night that took us all the way down to the short target. When the market finds support, it's going to go look for resistance. And it found it. See that? See that wick right there from Friday? The vertical line separates today, Monday. This is Friday, Thursday of last week, Wednesday of last week. Okay. Now, this window of opportunity, I drew this on the broadcast Friday. If you weren't tuned in Friday, you can go back and check, make sure I'm not pulling your leg. And the market opened last night, and we filled the window of opportunity. And then stopped and ran the other way, looking for resistance, which we found where we would expect. So then we just did some consolidating along the BBC. And then we had a leg right here, 10:30. Came right down to the short target, matching last night's opening low. Support will always send the market looking for resistance. Remember, the pullback to the BBC holds more often than it doesn't. Now the green line, the BBC, let me explain. The markets are fractal in nature. In other words, you can take this BBC and you can put it on a daily chart, a weekly chart, a monthly chart. And by the way, the institutional traders look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Again, it has everything to do with account size. But no matter what time frame or range chart, daily, weekly, monthly, 30-minute, 5-minute, tick chart, range chart, no matter where you put the BBC, it behaves the same. The pullback holds more often than not. Okay. Price is below the BBC, you expect lower prices. Price gets above the BBC, you expect higher prices. When price rallies up to a weekly trading zone, we expect resistance till proven otherwise. When price drops to a weekly trading zone, we expect support until proven otherwise. And again, once the zones are published Monday morning at 6:15 a.m. Eastern, they're carved in stone for the entire week. So we hit the short target, and then we hit the short target, and then we hit the short target. Now, if we go looking left, we could figure out why the price stopped dropping right here. But I'm going to encourage you to do that, okay? Because then you might actually believe it. Price is up against resistance at the step line, and then red and falling is resistance. And if price can somehow manage to overcome both of those, this is where it'll probably get stopped dead in its tracks, around 57.59. If we start dropping, keep an eye on today's zones, or this week's zones, which came out this morning at 6:15 a.m. Eastern. Okay, the Dow. Vertical line, here's today, which started last night at 6 p.m. Eastern. Back over here is Friday. See how price rallied up to the zone? Resistance. And then it dropped to the zone. Support. But then it fell through the zone and hit the short target. Support bounced us up to resistance, which sent us back to support at the zone. We then attempted a rally here early this morning, but it got cut short. Failed. Weakness in the markets. Got a high, lower high, lower high, lower high, and now a lower high. So we get below the BBC. Okay. We spike the zone, but close above it. Pull all the way up to the BBC. See, the pullback holds more often than not. And so down we go, looking for support. And again, if you go look left, you'll find out why the market found support there. Right now, price is trapped between the step line. It's directly below price, support, and red and falling is directly above price, resistance. Could price pull all the way back to the BBC here? It could. What do I think it'll do? I'm thinking it's gonna, in fact, there's a nice little window of opportunity right there. 41,960 down to 41,930. That's 30 points. You only need 20 points to get your goal for the day. If price does pull all the way back here, well, then you would possibly be able to trade 420.70 to 420.50. And if price just blew your mind and got above the BBC, there's a bearish cross. Price gets back up there, expect resistance where the red line got below the green line. On the Russell. Okay. The Russell also gapped lower on the open last night. In fact, it gapped below the short target. But it found support right here. See these lows from Friday right here? See where the step line crossed balloon climbing? I haven't really taught you about that. Somebody asked me about it the other day in a mentoring session. And I said, you just might be a trader. We bounce up to the BBC, come back down to the zone, the target, and the zone. The zone provided support. That's what we expect. So we get a leg, okay, and a retracement back to the BBC. Pull back holds, but it runs into blue and climbing overhead. So that sends it back down to the short target and to the zone. But then, like a rocket ship, off it goes. Now notice how on the way up on this big move, you got price, step line, blue and climbing, BBC. That's a perfect combination for a rally. But I think the rally's over. Why? I'll tell you. You see the step line, how it's starting to hook right? I mean, it was parallel with blue and climbing, but now it's hooking right. When the step line crosses from the left side to the right side of blue and climbing, that means price is most likely going to retrace back to the BBC. Then it becomes a question of, well, is the pullback going to hold or not? So, in order to be a trader, you got to have patience and self-discipline. Two things we can't give you. We can help you with it. We give you all the information you need. We provide all the tools you need. But you and God got to sort out the patience and self-discipline thing. Okay? But in your one-on-one mentoring sessions, again, I will help you with it. But as you can see, the zone held and the zone held, and then on the way upward, we spiked the zone but closed below it. Spiked it, closed below it, spiked it, closed below it. When price drops to a zone, we expect support. When it rallies up to a zone, we expect resistance. Now, only three things happen when price encounters a weekly zone. 70% of the times consolidation. 20% of the times rejection. 10% of the time is the slice. That's when on the 30-minute chart, the candle slices through a zone like it's not even there. When it runs out of steam, it will typically retrace back to the zone it sliced through and then continue in the direction of the slice. Beautiful example. On the NQ, quiet day for the NQ. Okay, this was the gap lower open last night. We didn't quite hit the short target, but we found support. See the low here from Friday? See the low there? That pushes us up above the BBC, above the zone, and right here we run into resistance. See how the blue hooked over and turned red, and you got that one little wick sticking up right there? There's your resistance. Okay, you can learn so much by looking left. So we get a leg down, we're below the BBC, so we pull back and the pullback holds. Then we get a leg down and the pullback holds. And then we get a leg, takes us all the way down to the short target, support, Price now looking for resistance. Right here you got resistance, potential resistance times 2. When red and falling and the step line get directly above price as they are right now, they can become resistance. If we get through those, then expect resistance at the BBC until proven otherwise. Crude oil. Crude had a big gap open last night. We're talking, we closed right at the zone on Friday, this red candle right here. We closed at the zone 69.35/40. We opened last night at 70.25. That's almost $1,000 per contract traded in that gap. We hit the zone, we hit the target and the zone resistance. Get a retracement, another run at the target, retracement, another run at the target, and then price consolidates at the zone, and we get up here. Go look left, you'll see why. Okay. Resistance sends the market looking for support, which we expect at the zone, but it spiked down to the target. Okay. Now the target was based off this bearish cross on Friday, where the red line got below the green line. Now, we've overcome red and falling. We're above the BBC. So there's a window of opportunity up here that might conflict with one of the new zones. If so, don't trade it. If it doesn't, trade it. 71.90 to 72.15. That would be $250 per contract traded. Gold. Last night we dropped on the open right to the short target in the zone. Support sends us to resistance, which sends us to support, which sends us to resistance, which sends us to support at the zone and the target. Support sends us looking for resistance. See the double top right there? That sends us back to the zone. Support. That sent the market looking for some resistance, which it found here in an unlikely spot in this case. That happens. That's why out of the 18,200 individual handcrafted alerts, we've averaged 20% or less being stopped out on a weekly basis, because once you learn to read the charts, you instinctively know what the next high probability move is. But 20% of the time, the market will do something completely opposite what it would normally do under a given set of market conditions. So don't fret, just understand that that's part of the business. Sometimes you're going to get a little surprise. That's okay. We come back to support, bounce back to resistance, and then we come back down to the target, to the zone. Support bounced us up to the zone, and now we found resistance. And we're about to get a bearish cross. So I suspect gold's heading lower. We'll see. Silver. Here's the open last night. We dropped right to the short target. Support. Sent us up to the zone, or to the BBC where we consolidated. Then we got a leg and a retracement. The pullback held. Sent us right up to the zone. More consolidation. Pull back to the BBC. More consolidation. Finally we hit the target to the tick. What's the high of that candle? Oh, we missed it by a penny. Okay, I'll try harder next time. And then we get back below the BBC and we head down to the short target where we overshoot it by, I don't know, a penny or so. 2 pennies. Support sends us looking for resistance. Will it be red and falling, or will it make it all the way up to the BBC? Either way, I anticipate another leg to the downside. Okay, it is time for the Michael Show. Michael, are you ready? Michael's not ready, man. Okay. Well, I know he'll be here momentarily. So let me fire up my other computer and get ready to monitor the YouTube chat box. You can feel free to. Nah, I wouldn't walk the dog because he'll be here in a minute. You probably don't even have time to make a sandwich. You could probably go to the bathroom, maybe. I don't know. Depends on how old your prostate is. Said the old man. Who is he talking to? Is this a recording? Don't see anyone in chat talking, and he is ignoring me. Hello. As I said at the start of the broadcast, this chat is not monitored for the first 50 minutes. So sorry you missed that valuable information. If you have a question, I'm very happy to answer it. So 8484 F. Sorry, you didn't hear it at the beginning. All right. There you are. Finally.
All right.
Okay.
Here I am. I'm
Thanks.
sorry.
No, that's okay.
I got into an unexpected meeting with Jeff.
Oh, no problem. Okay, you ready?
Yep. I'll bring it over here.
Okay.
Bring it over to me. There it is.
All right, looks good.
Now ready. Okay, here we go. Good afternoon, everyone. Today is Monday, the 4th day of November 2020. Go here to mytradingiq.com. Right here's the sign up for free 5-day training now, 9:15 to 11:30. Click on that. There's no credit card required for the trial. All right, click on that. There's no credit card for the trial. If you do click on it, should bring you to this page right here, where all that we ask for is your name, your email, and your phone number. Multiple choice questions here down at the bottom. If you have NinjaTrader, you can give us your machine ID. If you plan to use NinjaTrader charts, give us that machine ID. Okay, if you don't plan to use the NinjaTrader charts, then you don't need to do that. TradingView, give us your login ID for TradingView. You really should get TradingView. They offer a 30-day trial for free, and you do have to pay $7 for the data, but the trial is free. You really should get TradingView charts if you don't have them, all right, because that's where our indicators are primarily located now. All right, so we had another rough day today getting the goal for the day. I mean, we got it, but we had a rough day getting it. And this last couple of weeks here, well, this last week anyway, has been kind of rough on us. We've had Now, we had a couple of good days getting the gold. Then we had a blue day. On that day there, we got the gold quick and early, but the last couple of days, Friday and today, it kills our hourly rate down here. We're up 2,860 or something like that at one point, and it just dropped down. Anyway, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today we made 69 ticks on the NQ. We lost 20 on the Russell. We lost 7 on the YM. We lost 15 on gold, and we made 4 on the ES. That put us at 110 overall on the morning session. Today it took 57 minutes and 13 trades to get to the goal for the day. At that point, we're up $1,100. We took a total of 18 trades this morning. So on a month now, we're up $722. It's over 2 business days, averaging $361 per contract for 2-hour business day. On the year now, we're at $101,092. That's over 206 business days, averaging $490 per contract per 2-hour business day. This is with one contract, by the way. That's one contract of gains so far this year. Now, if you were to add one contract per month and quit trading when you get the goal for the day, let me just come in here and see. Yes, if you were to add one contract per month and quit trading when you get the goal for the day, that means, for me, the goal is $100. You can make your goal whatever you want it to be, but it has to be something that you can achieve every single day. Now, this $100 goal that we have, we set that goal probably 15 years ago, and it was based on 2 points on the ES when the ES didn't have a ton of volatility in it, and 2 points wasn't that easy to get. It was something that you could get every day pretty much, but it wasn't easy to get every day like it is now. It's easier to get every day. 2 points, the equivalent of 2 points or $100 in profit, is pretty easy to get every day. And this just shows if you consistently follow a plan and you get that, you don't be greedy, you stop trading when you get that 2 points and you keep adding to it over and over and over again, how it adds up and becomes something significant. So far this year, if you would have done that, you would have only had to work 60.75 hours, 60 3/4 hours, 61 hours, we'll just say. And you would have made $171,468 gross, averaging $2,822 per hour. Okay, not too bad. Now, there was some question this morning about the net of it all. All right, this is the number of trades that were taken net. I think, pretty sure that's the number of trades. The total number of trades that were taken getting the goal for the day. I think that should be this number right here. At the end of the month, let me just see which number that is. At the end of last month, it was the 76. Okay, it's this number right here. So it is the total number of trades taken getting the goal for the day. So we're at 911 trades taken getting the goal for the day. So you can add whatever your commission is to that. Now up here it says if you had an $8 commission, that would be the net. If you had a $5 commission, that would be the net. That is on the full amount of trades that we've taken in the morning. But if you apply your commission to whatever that number is, then that is the number of, well, what the net would be. Like for me, let's say my commission, let's just say my commission is $250 a turn. And that's not a side, that's a turn. We'll just say that so far this month, 29 trades times 2.5 equals $72.50 in commission so far this month for the 29 trades that I've taken. And I've made $2,640 quitting when I get the goal for the day for the 29 trades that I've taken so far this month in the 2 days. And that's an unusual number of trades for 2 days for me, getting the goal for the day. Last month, 1 month we had only 41 trades in the whole month. Anyway, the $72.50 out of the $2,640. So minus 2,640 equals that plus. So the net is $2,567. That's pretty good money for a couple days' work. Anyway, that was just to cover the question about the commissions and the net and all that stuff this morning. All right, so let's get into the actual trades. That was a lot of talk. Now let's get into the actual trades. Ding, it's 1 o'clock. All right, so the YM kind of had our number again this morning. We came back, but we didn't come all the way back. If I would have taken the trades when the European markets closed, then we would have gotten it easy. But I took this was our first trade right here. Our first trade in YM, made 20 ticks on that one. Had a break even there, and then we got back some right here. We got back a couple of ticks that got us to 23. And then we had one more trade in here somewhere that got us to -7. I think it was this trade back here. No, that wasn't it. It was this trade, the one before it, up here. Or maybe up here. This one, I think, is where we got it in here. Somewhere in here, we got another trade, and we ended up with -7. So I guess we got 16 ticks, it looks like. We ended up with yeah, that's what me, Dwayne, and Dan all took it at the same time. And I ended up with -7. We're all on the YM. And let's see, during the break, there was a nice trade right here. Another one right here. Another one right here. Now this one didn't put in a lower swing. This one right here didn't. That was during the break. No lower swing, so you're not trading in that direction again. And then it was one long trade right here that would have just stopped you out just now if you took it. Now it was pretty close to the prior swing high. My deal with trading right up next to the prior swing high is you got to have enough trade to get your stop to break even between your entry point and swing high or low. Okay, because a lot of times it's just going to bounce off the swing high and come right back at you. That was really it for the YM. We didn't really have a whole lot going on there. Okay. Now the Russell, let's see, on the Russell, we have our first trade in here on the Russell, -25, and then there were no trades in here. You see how it never went into the oversold, so there were no trades in here. There was one right here that I missed. That would have been a really nice trade to get. But this one right here is one that I did get. I got it on the pullback. That's why I didn't stop out and ended up getting 5 ticks on that. And we went into the break, and there was this move down here during the break, but it didn't give you a single trade setup. So the Russell really didn't give you much either. Okay, and the ES. Let's get all the way back to the beginning here on the ES. Is this still today? Yeah, I guess it is. Yeah, they are. Both of our trades. We had a break even on this one right here. That was our very first trade. Ended up with a break even. I should have gotten some points out of that. And I ended up with a +4 on this one. And that was it for me on the ES this morning. It got all over this weekly trading zone here, so you really couldn't do anything until it got away from it. And it didn't really get away from it until in here when the European markets closed. Then, see that 27 range, look for a 7-point drop. Let's go look at that in just a second here. All right, so right here we got, this was during the break. We had a short there that was good. We had a short here that was good. We had a short there that was good. We had a short there that was good. And that was it on the short side. Nope, there was one more right here. That was good. So all those trades right there in that half an hour span were good trades. A long trade right there that was good. A long trade right there that was good. A long trade right here that finally would have stopped you out. Okay, after you get the higher swing, there was one more long trade right here that would have been a break even. But let's take a look at that alert that just popped up. All right, let's just take a minute and look at that alert. We'll look in the log, and in the log, once it pops up, it was this one right here. It said on the ES27 range, there was an 85 cross, look for a 7-point drop. It was this right here that triggered the alert, going right up in here. Or this actually, sorry, the cross down. They said to look for a 7-point drop because when it comes out of the overbought, if the ribbon is bearish, you expect it's going to go down to the prior swing low. All right, the 7-point drop, that's 28 ticks is what it was suggesting. 28 ticks. So that means it would go from 748 all the way down to 741, right down to here. That looks like a pretty easy run for it to do right now. So if you see those and you come back here on your 7 range and you see opportunity to go short, well, you know you can hold on to that trade and it's probably going to give you quite a bit of leg. Okay, that's what those indications are there for. And you can set those up on your own computer. If you have the TV Trades Arranger, you can set those up on your own computer so that they give you the alerts and everything that you want. All right, and if you need help with that, just let me know and I can help you with that. JS, you didn't give us any information for charting stuff to get going with your trial. If you want to have the charts on your desktop, you got to give us your TradingView login ID. Okay. Now, I know you've taken the trial in the past, but I didn't see any information about you signing up for the charts, so I don't know if you ever did or not. I went and looked for that when I saw you didn't give your ID. Anyway, that's the yesterday, right? The NQ now, we had more trades on the NQ as usual than anything else. And we made more money on the NQ than anything else. And this huge run right here, see how it didn't have any pullbacks right there? We had all these little tiny pullbacks. Nothing was deep enough until right here. You had a nice trade right there, and then a nice trade right there. But there are only two of them that actually qualified in that whole run down. Okay. All right, Jay. Well, I mean, we can set it up so you can look at it after hours if you want. So just let me know. All right. Let me give you this. Oops. Hang on. Okay. There. So we can set something up for you, okay? All right, so on the NQ, now we started out in the hole today. A lot. You guys can't hear my frog, can you? Look for 100 tick move up on the NQ. All right, well, we're on the NQ, and what that's saying is if you go to 100 range, see what the ribbon's doing on the 100 range. Okay, go to the end and see what the ribbon's doing on 100 range. Okay, so on 100 range, it's saying it crossed down right here and to look for a pullback. Now the 100 range is bearish right now, so that's not terribly meaningful. It's saying it's going to pull back into the ribbon is what it's suggesting. Now it doesn't look like it's going to do that, and I don't think it's going to. So whenever you get one of those, come and check out to see what the ribbon is doing on the 100 range. And then you can go back here to your 31 range and say, all right, well, it said 100 tick pullback or 25-point pullback. What would that do for me in here? We're at 86.50, so that'd be 111 or 20, yeah, 21,111 right up here. Look, it'd be right up at the ribbon if you had 100 tick pullback right now, 25-point pullback. Be right up in the ribbon. That'd be kind of perfect, wouldn't it? If it happens, that's great. And what it suggests is that if it does happen and you get a trade opportunity out of that, you should definitely hold on for the long run. All right, you could actually go back from here. You could jump over to the 100 range and look where the swing low was. Expect that. There's a weekly trading zone down there too, but the swing low is right here. Now, I don't think it's going to go straight down there. If it does actually give you a trade setup in here, I don't think it's going to go straight down there. I think it's going to have a couple of legs on the way down. And it'll get you down here through this, and look, the swing low is right here. This is your swing low. That's what it's trying to get down to, ultimately. All right. So I said all that to say this. Let's go back to the beginning on the NQ. Okay, here on the NQ right now. We started out with the stop out on the very first one that ended up going down and doing what it should do. Then we followed up with this 48 tick that got us to plus 12. We went from minus 36 to plus 12. And then I got 6 ticks on that to get me to 18. And then I got 4 ticks on that to get me to 22. And then we stopped out, and that put us down to minus 14. And then we had something there, 24 ticks there, yes. It got us to plus 10. Then we had a plus 48 there, got us to 58. And then we had a plus 11. Yeah, plus 11 there, got us to 69. And that was where we ended it for the morning on the NQ. During the break here, right at the beginning of the break, you had to get a higher swing off of this before you could do anything else. So there was nothing through here. Then it switched directions. While I was wrapping up the morning session, I was going through some stuff for the folks on the trial, and we had these huge runs down here. Now, again, there were only a couple of trades all the way down because it only pulled back enough to get into the overbought a couple of times. Brings us to right here where we are right now. This is the trade setup that we were just talking about, the pullback up to 111, that 100 tick pullback or the 25-point pullback. That's what's happening here right now. So we've got a high here of 106.25, so be selling 98.25 on that. Okay, 98.25. It's 8 points below the top of the bar. That's what we're selling
98.25. Got it.
Selling 98.25 on the NQ. Just make sure the top of the bar is where I think it is. 625, yep, 98.25. Okay, so that just went up. Now that number is going to change, but it can't go up too much further here. The high on this bar is now 12, so we're going to be selling, the high is 12. We'll be selling 4 right there. That's what we're selling. Okay.
Selling 104?
Yeah, 104. The high of the bar, if the high of the bar is at 12, and it is, it's selling 104, 8 points below the high of the bar. That's what we're selling right now. 104. There it is. And we just triggered in. We're at 103.75. Only one ticket slip. Make sure my stop is in the right place. And there it is. And now we need 4 points in profit. Now, with all the stuff that I said about that thing that showed up over here, this should make it all the way down here. Okay, if it's going to continue down, if it doesn't stop us out right here and it's going to continue down, then this should be a huge trade. It should make it all the way down here to 28. Right? It should be a huge trade. Now, we'll see if it does, but that's what it should do. Now, as it moves down right here, we want, after it gets 4 points in profit, so it's got to get right down to here. And it gets down to there, we'll bump that stop. It didn't get down there yet. It should get down there right now, though. We'll see. We don't want this bar to close up. It closed up. We really don't want to see that one close up because then it's going to keep going. I was afraid of that. This really should push down. Now, let's just do a little analysis on what's going on right here. Okay, this is what it looks like. This is our 50% retracement. We just went through that a little bit. And let's back it out. Okay, this is what we're looking at this morning. This morning, this is what we're looking at, the inverted head and shoulder pattern, and this, and then it got up to here, and then it failed off of that. It didn't make it up to the top of that, and now it's come all the way back down. So bigger picture stuff. I'm trying to think what this looks like on the 30-minute without actually going to the 30-minute. We have higher lows right here, and now we have higher highs. This really, I was thinking this was really going to go down and give us what we wanted, but look at the reversal that it's, wow, that's a huge move up right there. Okay, well, that's why we have stops. That's why we have stops. This is a huge move up. So the bigger picture, this wasn't even a 50% retracement of the bigger picture, I don't think. Let's grab this and bring it down here. Oh, it was exactly a 50% retracement of the bigger picture. Right there was exactly a 50% retracement of the bigger picture. And so it's running up. So what it do now then, now that it's done this and it's taken us out, just do the analysis. What is in front of you? This is what it should do on the upside. From this swing low right here. Oops. Move that out of the way. This swing low right here. That's what it should do on the upside. Okay, so now we can take this. We can actually use this again and stick it in here. And then you'll see that it should get up to here and then it should retrace back down to here. That's what, overall, that's what it should do. If it breaks above this level.
Oversold.
Yep. Yep. So if it breaks up above this level, you see looking left, it hasn't really gotten in above this level yet. It's going to be good enough to give us a trade setup if it bounces off here. We are in the oversold. I'd like to see it pull back and hit the ribbon, but I don't think it's going to right now. Let's just look at this. All right. This is one of those ones that would have given us a black arrow in the past that we would have ignored, waiting for it to come back and hit the ribbon. The fact that it didn't get up above this level right here is kind of, well, I don't know. It's sort of suggesting that it doesn't have any more strength after that level. That was a big move up right there. For the 31 ranges, that's a lot of 31 range bars right there.
Yeah, sure is.
And what time is it? 1:15. So we have enough. This should be plenty of time here to get another trade off. We're right at the weekly trading zone too. I didn't notice that. I feel like I did notice it a few minutes ago, but I got sucked right into that weekly trading zone. Went right through it. And now it's about to give a long trade right here. And there it is. It's not the prettiest long trade, but it is one.
What price?
The long is right here at 42. 42. 41.50 is where I'm in. I'm going to throw my stop at break even on this. And I'm out of break even on it. And that one, you want to be careful with that one because it didn't put in a higher swing from here all the way back over there. It did put in one from right here, but there's a swing right before that right here that it failed to exceed. All right, is Chris B in here? No, Chris B is not. Okay, and get my phone. Okay. April. What's that doing in there? John, he said, oh, why did I have that in there? That's not supposed to be April. That's supposed to be November. Thank you, John. Everybody's watching what I put in that thing. All right, so it did get a higher swing over here after that last move up. It gave more than I thought it was going to. It is giving another trade in here. 139.25 to 147.25. Where's the swing high? 53. That's going to give us 5 points. It's close. It's got to get just the right fill on that. The ES put in just a couple tick higher swing too, so the ES could give us a trade here as well. The NQ right now, you're looking at 147.25, I think. I'd rather have it close down here. I would rather see it go down to the ribbon and to the zone. That's what I'd rather see. Good. That's much better. And the low on this is now 36.50, so you'd be looking at 43.50 right now. And hopefully the low actually goes down some more. Yeah, the low's now down to 34, so we're looking at 42.
Buying 21.42.
Yep, this is it right here. And there it is, just filled. 21.42 1/4. And my stop probably got bumped a little. Okay. So, bounced off the weekly trading zone and the ribbon right there. There's no reason for this thing not to work. It should go straight up. It should have another one of those legs right there. That's what we should see. But we'll see what we do see. Now, wow, that is pulling back pretty hard and fast.
Yeah, it is. Should have left that alone. I should have.
226.75 is the next pivot level up. It's way up here. 226.75 is the next pivot level. Way up here. So we'll see what happens with it.
I'd be happy to just get the risk off this trade. At this
well, if it's going to start going up at all, it should at least make it up to the prior swing high.
Yeah.
You got these nice leg lengths right here. So better let it do its thing. Let it do its thing. Get the mind out of the trade. We've accepted the risk. The ES also has a trade over here. And the YM doesn't really have anything. The Russell doesn't really have anything. Here we go. This could be it right here, D. 46.25. That's enough. Stop to break even. And the ES is starting to run too. Here's the ES trade. Stop to break even on that one too. Gonna lock in 4. Lock in 4 on the NQ. And now I'll hit cancel on that and bring it all the way over here, and we're out of break even on the ES.
I'm out of break even on the NQ.
Right. We're both out of break even on everything. Just a bunch of break evens. So we had
So
going
your
there.
bracket on the NQ's 48 by 36, right?
Yep, 9 by 12 points.
Okay, just want to make sure.
9 by 12 points is what it is. Now, neither one of those put in a higher swing, so we have to wait now. We don't have anything else happening. Let's go look at the other stuff. I haven't looked to see what Bitcoin's doing today. Did you look at that yet? Bitcoin? Oh, it's getting hammered.
Nope.
It's getting hammered, even worse than I thought it was going to get hammered from the run-up last week. Well, it's right at the BBC right now, so
It's at 68,000. That's
yeah, 68,145.
yeah. After that last rally, that's a reasonable retracement.
And it's right at the BBC, so we'll see how things go with that.
And
what else did
the range trigger's about to. It's an oversold.
Oh yeah, it's about to quantity oversold too. And the short stack guy or whatever his name was, I don't remember. It was something like that, wasn't it?
Yeah, something I forgot. No, trap, something trap.
Trap, short trap. That's what it was. Short trap. Okay, Jay, I see a text, but I don't see the actual name. You say here it is, but then you didn't give me your name. But I'll get you set up as soon as you give me that name. All right, I'll just set you up with what you need. Now, what level of trading view do you have, or did you get, Jay? Because that matters too. Okay, yeah, they're free, but there's different levels of free. Did you get the free premium, the free plus, the free essential?
I got 60 days left roughly on my premium, so I'm hoping they'll have a Thanksgiving special.
Yeah, Thanksgiving special. We should have one of those coming up. Yeah, Jay, I remember that name. There's something like that name. But there are different levels because I can direct you to a different level of pre-made chart, depending on what you have. Well, I'll just show you anyway. They're in the same place. All right, so we have higher swings on both the NQ and the ES right now, so it did end up moving up like we wanted it to. When I'm finished with this session here, Jay, I'll set you up with your trading view. Okay, and I have another meeting coming up after that. So if you want to set up a meeting with me, then okay. Okay, well, everything's kind of the same except it's easier now. We have the future trades range trigger and we have the ribbon. Remember, a year ago, it looked a lot different than it does right now, didn't it? Okay, you have the absolute free basic version. If you sign up for one of the trials, the free basic version, you only get 1 or 2 indicators, and you only get 1 or 2 indicators. You don't get any alerts, I don't think, and you're going to be working with delayed data. So there is another version that you can get for free. I'll show you how to do it. Let me just do this. Okay, if you go here to mytradingiq.com, click on trading platforms. Well, you're going to do a free one anyway, so do the plus for free. Yeah, do the plus for free. It's a free trial. If you click on this thing right here, if you go to mytradingiq.com, click on trading platforms, and click on this right here where it says share your love, CFRN. It's going to bring you to this page, and click on monthly, and then choose one of the free versions. Probably the plus one will give you 4 charts. Okay. And you have 30 days free with that. Now that's still not going to give you real-time data. Okay, you're going to have delayed data with that. If you want to get real-time data, that's going to cost you $7. We don't get the $7, they do. But to get the real-time data, all you have to do is go once you get your ID, once you go through that process, I mean, it takes like a minute. Go through that process. Go over here and click on this and go to account and billing. Hang on, let me save this. Click on this and you go here to account and billing, and hang on, it's coming up eventually. Here it is. And the one thing that you need in here is, where is it? Oh, it's right here, this one. Now, in my state, it's $7. This is in Arizona. It's $7.60. They charge you the tax in Arizona. But it's like $7 a month, maybe plus tax, maybe not, depending on what state you live in. You got to pay that $7 to get real-time data. Okay. And once you do that, your charts will look just like mine. If you do go through that process, then I'll send you an email with some information in it anyway. But if you do go through that process, then go here to trade rules, and down here at the bottom, this one right here is my layout. You'll be able to open that up. Okay, I'll just pop that link right in here right now. Okay, well, it's actually the link that I'm using over here. This way here. Just copy that one, and I'll stick that in here. Okay, that's the link. That'll be a read-only copy. Once you get everything set up, it'll be a read-only copy. Click on the copy button in the upper right-hand corner, and that'll work. Okay. We have another trade that's just about to set up right here, right now. On the NQ again, it's got a low here, 148. It's going to be 155 is what you'll be buying on that, 155. All right, the ES already did set up right here. Did not get into that. The YM is about to set up again over here, but the YM I'm not going to do. It's too close to the swing high. Okay, and the NQ didn't happen, so I'm going to cancel that order. All right. Missed it here. Nothing there, nothing here, nothing here, nothing here. We only have a minute and a half left anyway. All right, so if you have not taken a free trial with us, go here to mytradingiq.com. Click on this purple button. There's no credit card required for the trial. Click on the purple button. It's going to bring you to this page. All that we ask for is your name, your email, your phone number. Down at the bottom. If you have NinjaTrader and you want to use Ninja charts, give us your machine ID. But if you want to have all the indicators that we use in the room, get TradingView charts and give us your TradingView login ID. Okay. Now, getting charts is pretty easy. All you have to do is go here to mytradingq.com, click on trading platforms. Just watch this little video right here. Okay, it's a 3-minute video to get your charts. Click this button. This doesn't really send us an email unless you have it set up right. Your email is set up right. So just email us however you've been emailing us. Send us your machine ID. Not machine ID, login ID. And I'll set yours up right now. Jay. Okay. And that is it. With that, I guess we can pass it back out to fabulous Phoenix, Arizona in Studio A, overlooking South Mountain, America's largest city park. Dwayne is ready.
Yes, sir. Recap of the morning session.
Today it took 57 minutes and 13 trades to get to $1,100 bucks.
Good job.
Thank you. Thank you.
Okay, guys, we have made it through all of the markets, and we're just going to peek real quick at the daily one last time, where we still have a doji straddling the 24% fib retracement. And those fibs are based upon the low put in August 5th and the new all-time historic high put in October 17th. So This little body's just sitting right on top of that 24% fib retracement. But overhead, we got a bearish cross. Now, if we close up today, it may not cross. But if we close towards, and I talked about this on Friday, I said, because we had this impressive rally off the 24 all the way up to the 24% fib extension. I said, if we should, and you can go back and listen on Friday's broadcast, I said, if we should close the day near the low of the session, that means that the institutional traders don't have enough faith in this market with elections, and then we got the Fed on Wednesday. It's just a sign of weakness. And so, as you can see today, we've come nowhere near challenging the high of Friday, but we have taken out the low of Friday. So I'll say it again, if we close near the low of the day today, we will get the bearish cross, and we will anticipate lower prices. And remember, you got a bullish cross straddling this 38% fib retracement. Okay. All right. To become a member, well, you can go to mytradingiq.com, watch some videos and whatnot. But if you want to become a member, just email support@cfrn.net. And in the subject line, say, I want to become a member. Hit send. Always remember, you have to hit send. Valerie will then spring into action. She'll send you an email with some information and a link. Once you click the link and become a member, she'll then send you more emails with more information. Keep those in a folder somewhere so you can find them, because as you get going with your training and your learning process, you're going to need that information. You might look at it the first time you see it and go, I don't even know what this stuff is. You will. It's gonna, this is not some overnight get rich quick scheme. This is you building a business. This is you actually learning how to trade, not some kind of parlor trick. Okay. 9 out of 10 traders fail because they don't have a teacher. I bet 9 out of 10 doctors would fail if they didn't have a teacher. I bet 9 out of 10 pilots would fail if they didn't have a teacher and wouldn't live to tell about it. In other words, if you want to learn how to do something, you need a teacher. That's why we have 2 hours of live training every trading day in an interactive environment. Ever been reading a good book and wished you could ask the author a question? Or maybe you're watching some kind of trading video that's been archived on YouTube, and you wish you could ask the author what he meant when he said whatever it was he just said. Well, our training room is live trading and live markets, and you are able to ask questions. Your questions are not an interruption of what's going on, they're the purpose of what's going on. So make sure, especially if you're on the trial, okay, ask lots of questions, because at the end of 5 days you've got to make a decision whether or not this is right for you. Okay. All right. Along with 2 hours of live training every day, you get private one-on-one mentoring, the strategy you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETF, doesn't matter. Price flows the same across all markets and all time frames. As a passport holder, you'll get the Logic 247 alerts around the clock. You'll get the concierge trade alerts every evening when they're published, shortly after the Globex open, sometimes right at the open. You'll get the weekly trading zones every Monday morning at 6:15 a.m. Eastern. And you'll be able to attend the members only workshop every Thursday night at 8 p.m. Eastern. Everything a trader needs, all under one roof, one low price. Oh, and did I mention around the clock support? Yeah, via Telegram. See, you see 2 hours of the live training room, and then you see the afternoon broadcast, but we're up and running from Sunday night at 6 p.m. Eastern till Friday afternoon at 5 p.m. Eastern. So whoever you are, wherever you are in this world, if you have a question, ask. If I'm not around, one of our other traders will answer. And that's another thing. You get to talk to our traders while you're on your trial, trying to make up your decision, whether or not, this is right for you. Our traders who've been with us for a while, they're in the discussion group in Telegram, which Valerie has sent you the instructions of how to set up and how to be a part of. So please do it. Okay. All right. It's time now for our good word for the day. Now, on Thursday, we talked about how to develop patience. And then on Friday, we talked about how to develop patience. But now it's Monday, so we're going to talk about how to develop patience, part 3. Proverbs 17:22. A joyful heart is good medicine, but a crushed spirit dries up the bones. Here are 2 more things you need to do in order to develop patience. One is develop a sense of humor. The Bible says in Proverbs 14:30, a tranquil heart is life to the body. Scientific studies reveal that people who laugh live longer. Humor is a stress dissolver. It's an antidote to apprehension. It's a tranquilizer without any troubling side effects. It's a shock absorber for the potholes of life. When you can see the humorous side to a situation, it crushes its power over you. And when you trust God with your problems, you can continue to have a joyful heart. Number 2, deepen your love. Paul writes in 1 Corinthians 13:4, love is patient and kind. That means when you are impatient, you are unloving. When you love someone, you're concerned about that person's wishes, distress, needs, and point of view, not just your own. When you are filled with love, almost nothing can provoke you to anger or impatience. On the other hand, when you are filled with anger, just always remember the word anger, if you put a D in front of it, it becomes danger. Okay? That's a freebie. When you are filled with love, almost nothing can provoke you to anger or impatience. On the other hand, when you are filled with anger, almost anything can provoke you. Under pressure, that was a good song, right? Under pressure. Under pressure, whatever is inside you is going to come out. So deepen your love. Follow Ephesians 4:2. Be completely humble and gentle. Be patient, bearing with one another in love. And one more thought. When you learn to love the people who irritate you, you take a weapon out of Satan's hands that he can use against you. So today, pray, Lord, make me a more patient person. And hurry up. No, just kidding. Seriously, pray that. Ask God to make you a more patient person. And he will. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy, and with His grace. And I'll see you at the bell. 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 I got the bell. Okay.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.